Hey everyone, Ken Wink here with Summit Financial Consulting to give you the market commentary for February 2025. Please remember, tax time is here. Everyone's going to start to receive their 1099s in the mail. If you have a retirement account, you probably already got your 1099s, but if you have a non-retirement account, those usually don't arrive until the second or third week of February. So if you want to play it safe, don't schedule your appointment to prepare your taxes until at least March 1st. If you have any questions, just give our office a call. We're always here to help. 2025 is upon us, and now that January has come to a close, we're happy to say that it was a positive month for the stock market. So moving forward, past performance cannot predict future performance, of course, but there are three indicators that a lot of stock market prognosticators, us included, will take a look at. First is the Santa Claus rally. That finished off mixed this year. Would have been better if it was positive, but it was mixed. But two pieces of good news is that the first 5 days of January were positive, and the whole month of January was positive. So according to the Stock Traders Almanac, when the first 5 days of the year are positive, 83% of the time, the stock market's positive for the year. And the average gain across 48 different years where that happened was 14.2%. So I think everyone would be happy with 14.2% if that happened to repeat this year. The last indicator that we look at that I just mentioned is the month of January. And there's an old saying on Wall Street, as January goes, so goes the rest of the year. And we'll see if that applies this year. Now, sometimes rules of thumb like this, they don't make any sense on the surface, but they become a self-fulfilling prophecy if enough people follow them. One last trend that's sometimes important to follow is how consumer staples are going, especially how consumer staple stocks perform versus the S&P 500. So when people are scared, they're typically scared of investing in aggressive stocks. So sometimes investing in things like pasta and toilet paper and soap and everyday necessities, that's sort of a safe way to go. It's also potentially a dividend-paying way to go. So when times are good, those safer stocks typically don't do so hot. There's usually a rush to safety when things are not looking so good. So in this case, those stocks are not doing very well. So that is a positive signal for the overall stock market and for the economy, potentially. But again, past performance can't predict future performance. One last stat from 1928 until the year 2020. The stock market has typically gone up after a presidential election if there was a change in party. On average, when the incumbent loses, the stock market goes up 8.6% for that first year of a new presidency. These are based upon historical averages. Who knows exactly what's going to happen, but it doesn't hurt to know that history is sort of tilted towards our side this time of year. Hey, if we haven't spoken in a while, or if you've had any changes to your family or your finances, please call us right away at 586-226-2100 to schedule a review meeting. We would love to have a review meeting with you. We can do it over the phone, over Zoom, or face-to-face. So give us a call. On behalf of Bob Wink, Ken Wink, Jim Wink, Zach Backner, James Baldwin, and Daniel Ladzinski, thanks so much for watching. Please like and subscribe.
Summit Financial,
working with people you trust.